Why your choice of advisor matters more than you think. My name is associated with SaferWealth, and I want to share something important before we work together. I am a CPA and have been financing businesses for over 30 years. I started with the Canadian Small Business Loans Program, or what the industry calls SBLs, and have since helped clients secure tens of millions of dollars in business financing. Over 3 decades, I have developed a reputation of trust and reliability with the banks. This means that when even large companies struggle to get loans approved, they hire me to get them the funds. Why? Because I speak bank. I understand how lenders think, what they need to see, and how to present applications that get approved. But there's another reason banks trust me. I never associate myself with marginally ethical people. Not once in 30 years. That discipline is why my clients succeed where others fail. Unfortunately, the advisory world is not uniform. Some advisors and brokers operate without professional oversight, and this creates risk for everyone involved, including you. For regulated professionals like CPAs, lawyers, licensed financial planners, and insurance advisors, there are serious consequences for misconduct. If we do anything wrong, we are reported to our regulatory bodies and can lose our license. Our careers, our reputations, and our livelihoods depend on maintaining the highest ethical standards. Therefore, if your advisor is in good standing with their professional regulatory body, you can have confidence that they operate with integrity. However, if your advisor or broker is not associated with a professional regulatory body, the risk increases significantly. There is no oversight, no accountability, and no consequences for cutting corners or engaging in questionable practices. This creates a higher risk of guilt by association for you as the client. Let me speak freely. All the banks know who the aggressive and problematic advisors are in the business. They track patterns. They share information. If your application comes in associated with one of these advisors, it may lead to rejection, even if you would otherwise qualify for the loan. The damage doesn't stop there. Once your name is connected to a problematic broker, that association can follow you. Even if you later retain a qualified professional in good standing, the previous association may still lead to further rejections. I have rehabilitated applications in these situations, but it requires extra work, and the professional taking over your file becomes vicariously associated with the problematic broker who came before. Be very, very careful of your associations when banking of any kind in Canada. Your choice of advisor is not just about convenience or fees. It can determine whether you ever get access to business financing at all. To serve you in a way that will greatly increase your odds of success, we have developed a comprehensive process that respects your time while ensuring you are fully prepared. First, we have prepared a video series that will take you approximately 30 minutes to complete. This ensures you understand the CSBFP program thoroughly, including the risks of dishonest behavior and the consequences we discussed earlier. After the video series, there will be a set of questions to respond to. Many of these confirm your understanding of the material. Others serve as a screening to determine whether you meet some of the hard rules the CSBFP has. For example, if your business has over $10 million in revenue, you don't qualify. If you have under a 650 credit score, your chances become difficult. These are realities we need to identify early. Once we have determined you are a good candidate, we will email you a detailed document request for the application. All of this is done on your time, in the privacy of your kitchen table. No wasted trips to offices, no pressure, just a clear, professional process. Here's the truth about our industry. A lot of time is wasted with people who would never qualify or who get bored with the process and disappear. This is why many brokers and advisors charge 10% of the loan amount as their fee. That charge, combined with all the other fees, brings the cost of lending higher than what I believe is fair for the client. Our approach is different. Everyone who makes it through the SaferWealth screening process not only has a very high chance of success, but will only be charged 5% of the loan amount. Additionally, you receive free advisory support for 60 days while you start your business. We will need a total of about 5 hours of your time throughout this process. If you are not excited about investing 5 hours of your life and following a structured process, then you will not be a good client for SaferWealth. We need clients who are committed, organized, and ready to do things properly. But if you are excited about the opportunity, if you understand that 5% is exceptional value for the services you receive, and if you appreciate working with a regulated professional who has spent 30 years building trust with lenders, we will work very well together. You will launch your business on a solid foundation with the best possible chance of long-term success. Take some time, talk with people you trust, think carefully about the advisor you choose and what that association means for your future. I am hoping we can work together to create a great future for you and your family. Your SaferWealth advisor would be happy to help and guide you through the process.